Welcome everyone to the webinar. We'll just give it another minute or so to allow everyone to log in. Well, hello everyone again, and we'll get started on our webinar for today. Welcome to today's Business Essentials webinar, where we take a closer look at R&D and grants for small to medium enterprises, small business R&D and grants. Before we begin, I'd like to acknowledge the traditional custodians of the lands we meet on today, including here in Canberra, the Ngunnawal people, and pay my respects to their elders past and present. I extend that respect to any Aboriginal and Torres Strait Islander people joining us today. My name is Andrew Sykes and I'm a partner in the RSM Business Advisory Division. Today's session is for small business owners and startups looking to tap into government support to innovate and expand. There is a fair bit in today's session and we will be recording this, and that download will be available for you. So according to the ATO's first R&D tax transparency report released last October, where they gave details of R&D expenditure data in Australia, 48% of the total 11,545 claimants of the R&D tax incentive were small businesses. These figures highlight just how critical targeted support, like the R&D tax incentive, is in empowering Australian businesses to invest in innovation, drive growth, and stay competitive in a national and global scale. I'm delighted to be joined by two veterans today in their respective fields. I've got Larissa Lai, a partner in our R&D tax division. Specialising in innovation and incentives, Larissa has significant experience helping small business navigate some of the complexities associated with accessing the R&D tax incentive. We also have with us Edward Day, a senior manager in our government grants team. Edward is a seasoned specialist in government grants and supports businesses in preparing grant applications across various federal and state government programs. Now, we're going to have opportunity for questions today. So if you have any questions, feel free to drop them into the chat. We'll address as many of those as we can during this session. And RSM has also released our R&D tax incentives transparency report. One of our assistants will drop a link into the chat for that report, and you can access that for free at the RSM website. With that, let's get into it. Edward, over to you to talk about grants, which can be like a lifeblood to small business. Can you give us an overview of the current government grant landscape in Australia?
Sure. Thank you, Andrew, and good morning or good afternoon to everyone. I'm here in the West, so it is still morning. I'm sure others from around the country are joining us. So today, I'm going to highlight some of the strategies for winning government grants, give you a bit of an overview of the grants landscape, talk about having the right mindset when approaching grants. There are hundreds of grants programs available. I'm going to touch on three just to give a good flavour of ones that might be relevant to SMEs. And going to spend most of the time today really talking about what are the key success factors, the top tips that might be relevant to help when putting together a grant application. So in terms of way of an introduction, I think, and without stealing Larissa's thunder in any way, it might be helpful just to understand the difference between the R&D tax incentive and government grants. Now, Larissa's the expert and she'll go into this in detail, but the R&D tax incentive allows to make a claim to government for reimbursement of funding already made. You have to meet the eligibility criteria, and if you meet the eligibility criteria and demonstrate that you are a strong fit, then you get the money. There is no competition in that regard. However, government grants are the reverse. They're highly competitive. Not only do you need to convince the government that you meet the eligibility criteria, but you need to convince the government why they should fund your project and not someone else's. I used to work for the West Australian government, and for the funding rounds that we opened, we'd often get somewhere in the region of 100 applications, and anywhere between 8 and 20 were successful. So the chances of success are quite low. It's highly competitive, so it's important to understand that nuance and understand what you can do to increase those chances of success. So it's about having the right mindset, and it's about not so much of a one of entitlement and what can government do for me, more what can I do for government. And we think of things in that way, that helps to kind of get the engagement off at the right foot. So government grants are all about the government, and they tend to cluster around government priorities. So it's what can we do for government that we're looking for. So there are hot sectors, there are key sectors that get a lot of love, that are really aligned and strongly supported by government priorities. So anything in relation to decarbonisation, renewable energies, that transition to net zero, both from an application perspective, rolling out solutions, and also developing new solutions is awash with funding. Innovation in manufacturing, helping Australia have its future made in Australia, is a signature policy and priority of the government, helping Australian manufacturing be world leading and cutting edge is a strong focus of government. Anything to do with defence, the agri-food supply chain, and more niche things such as space and cyber technologies are also well supported from government grants perspective. I guess the important thing to understand is government grants focused on growth, focus on what is the project going to deliver post-funding award. So it's not about reimbursement of activities already undertaken. It's a future-facing project that's going to grow your organisation. It's about growing. It's funding a project-based activity as opposed to the operating expenses, day-to-day expenses of your business. It works in tandem with other forms of funding. If you're looking to seek an investor or a loan, if often grants are 50-50, so 50% from the grant and 50% from your resources, it's easy to have a conversation with a lender or an investor if they're only taking on half of the project. If the other half can be delivered from a government grant, it helps ease those other conversations around sourcing other forms of finance. Grants love a collaboration. They love people working together to move things forward. And a lot of the focus is around economic and sectorial benefits. What is your project doing that's helping the government move in the direction they'd like to go? Driving innovation, making sure Australia's at the cutting edge. There's projects that might solve a challenge that's not just facing your business, but that can be applied to others and others can learn from, are always strong candidates for funding. It's all about helping Australia, that Future Made in Australia initiative, which we've talked about, how we can build the capabilities of doing things onshore here rather than relying on others and imports. There's a strong focus around supporting the region and diversifying our economies away from the major cities and regional development, as well as creating jobs. So that's a sort of brief overview at a high level of the grants landscape. And here are some 3 programs that could be relevant to small and medium enterprises. So the first of which is the Industry Growth Program, providing up to $5 million of funding for applicants. And this is really about businesses that are looking to bring forward a new technology, an innovative process, product or service that is perhaps in its earlier stages of development, and funding is needed to help get it to market. That's really what they're looking for. And the way to get access to that funding is you first have to apply to something called the advisory service. Now, this is a benefit in 2 ways. It's a pathway into the funding programs, but it's also an independent advisor that is funded by the federal government to work with you as a business to look at your growth plan, look at the technology and the product, process or service you're trying to bring to market, and giving you free advice as to how you can move that forward. So it's a great sort of stepping stone in terms of having someone who's, and these are independent consultants recruited by the federal government and paid for through this program to help you drive the growth of your business. And so I guess at worst, you get some free advice and some support about how to grow your business forward. At best, you then get eligibility into the 2 grant programs that sit underneath that. Early stage program gives you, with emerging technologies, gives you up to $250,000 in funding, and the later stage where you're closer to market, it's up to $5 million of funding. And all of that funding is matched. So for every dollar you take from the government, you need to provide one of your own. And the best thing is you can apply for that program at any time. There's no fixed sort of dates when you have to get your applications in by. The other one is the Cooperative Research Centres Project Grant. That provides up to $3 million for short-term industry-led collaborations with academia. So there's a defined problem that industry are facing. They can work with an academic partner and another industry partner over up to a 3-year period to really nut out that technology, to bring that learning forward and to develop that understanding and that knowledge and closer to commercialization. And that can be supported by up to $3 million of funding. Now, there is a round of that that's open at the moment, which closes on the 7th of October, and they recur every 6 to 9 months. So there's always an opportunity not far away to be applying for that funding. Defence is another area where there is significant amount of money flowing into it, up to $1 million through the Defence Industry Development Grants. So that's for SMEs that are in the defence supply chain. You don't necessarily need to be supplying the Department of Defence directly, but if you're manufacturing a widget that finds its way somewhere into the propulsion system of the Collins class submarine, you can be in that supply chain. So if you're looking to train your people, there is money available for that. If you're looking to have the work on the security and compliance aspects of working in defence, there's money available for that. Up to security is up to 100,000, skills is up to 250, and if you're working with overseas parties and exporting, is up to $250,000 available. If you're looking to build and grow your manufacturing and development capabilities, there's up to $1 million to help with the tooling and the scaling of manufacturing to meet the demands of the defence sector. So that's a very whistle-stop tour of 3 key programs. And there are, as I say, there are many more programs out there. And what we do is we spend time with clients understanding what is it you're trying to do, what is your direction of travel, and what is the most appropriate program for you. So the final area that I was going to cover today was, we talked about the nature of grants being highly competitive. So how can you put as many pluses in your column to stand yourself in the highest chance of success going into a grant application? So I wanted to talk you through 3 key areas and 3 kind of areas that influence the success of any grant application. So the first one is around clarity. Now, clarity is around definition. The first one, really being clear about what you're talking about. So a grant application in some ways, a bit like stand-up comedy. The way that stand-up comedy works is the comedian will take the time to ensure that the audience really understands the aspect of modern life, or the thing that Trump has just talked about. So everyone's on the same page and they know what they're talking about. Then they come in with their punchline, with their different perspective that creates the humor. So it's exactly the same in a grant application. You can't expect people to value the submission you've put forward if they don't fully understand what it is that you're talking about, where your project starts, where it ends, how much it's going to cost, the different time frames and stages within it. Being clear on that and bring that definition to it is essential to making sure that everyone's on the same page and they know what they're talking about. Language and terminology. Every organization, every industry has their own sort of acronyms and shorthand and abbreviations and ways of talking that everyone in that industry or organization completely fully understands, but sometimes often forget that those outside of that boundary have no idea what you're talking about. So it's very sure to making sure that the language and the terminology used in an application is very sort of plain English, gets to the point, and avoids making assumptions that the reader knows what this acronym means, so I'll just use that because it's much shorter. And that can be a downfall if you don't be clear in terms of what it is that you're talking about. The other element of clarity is around structure. You can structure, and that can be both in terms of how you lay something out physically on a page. You know, the project has 3 phases, phase 1, 2, 3. So using that kind of structure of the document to kind of convey the message. And it's also pulling together a reasoned argument, telling a story with a beginning, middle, and end. So working through, this is what we're talking about, this is why it's important to you, and this is the impact it's going to have. That structure helps to provide that clarity and provide that sort of ease of readership of the assessor. I think it's important to remember that when you're assessing a grant application, it might be, 4 o'clock in the afternoon. This is the 75th application you've read today. You don't really have the desire or mental capacity to really scratch your head and figure out what exactly is being said in this application. Make it easy for the reader. Now, specific. So this is, I think, something that we talk about often with clients. It's being specific rather than accurate. So a specific statement avoids vague language. There are significant benefits to doing this. This will that implies you don't understand fully the scale of what you're talking about. So, for example, vague language such as flowers grow better in sunlight, instead of providing a reliable source, like according to research from Harvard University, flowers grow up to 10 times faster with access to 8 hours of sunlight a day. It's a much more specific. The actual, whether it's 8 hours or 9 hours or 10 hours of sunlight, doesn't really matter, but it gives so that's that specificity versus being 100% accurate. And it's finding that sort of, perfection is the enemy of good. And it's about understanding the statements and providing that clear narrative around what is you're presenting or pitching to the government. Being specific about what you're trying to do and what you're trying to talk about can build, but also erode the confidence. So I used to work for the West Australian government assessing grant applications, and we had one application where they were seeking to fund a $7 million project. As part of the grant application, we asked them to break down what are you going to spend the $7 million on. And they put $6.9 million construction, $100,000 on project management. And that was the extent of the breakdown of their budget. So that raised all sorts of questions in the assessor's mind. Well, why is it so lumpy? Why do you understand your costs? Where have you got these numbers from? Are they realistic? Do they make sense? If that had been broken down with a level of granularity and backed up with quotes and source documentation, it would be a much more powerful argument. So if you're not specific and don't fully explain or structure your argument, it erodes the confidence that it's actually a winning argument. And you don't want to make it difficult. And again, that scenario I talked about being back in 4 o'clock in the afternoon, 75th application in, you want it to be easy and you want it to give them a reason to say yes and not a whole heap of reasons to say no. The final thing is bringing all of that together. That really drives a compelling application. So you want to stand out from the crowd. It's about having that funder-centric mindset. So it's not about what government can do for you. It's speaking, conveying your project in the terms that government would understand. Government is trying to achieve these objectives, and by giving us some funding, we will help you move in that direction of travel. So it's conveying your project in how I can help you, government, rather than the reverse. So that's a strong focus. So really making sure putting them at the center of everything. Doing your research, to fully understand what it is the government is looking for. What have they said in the guidelines? Have they made a webinar like this available to help them to talk through? This is really, when we say we want these kind of things, this is what we mean. This is what we're looking for. Taking all the opportunities that you can to fully understand what it is you're applying for, so you can then talk with authority about you're trying to do this and this is how I can help you. And so finally, it's about that wrapper, bringing that all together in a clear, specific and fact-based narrative that speaks the funder's language and helps you to deliver how you can support their the achievement of their priorities. So that's what I had to share with you today. We will have opportunity to ask questions and take questions towards the end of the session. I look forward to those. But right now, I'll hand over to my colleague Larissa, who's going to take the rest of the session forward. Thank you.
Great, thank you so much, Ed. Hopefully you can all see my screen there. So as Edward mentioned, the R&D tax incentive is quite different from government grants in that, it isn't a competitive based program. So it very much is a self-assessed program. If you have self-assessed that you are undertaking eligible R&D activities and you have spent eligible R&D expenditure, then you can apply for the R&D tax incentive. Unlike grants as well, it's not forward-looking, so you are looking retrospectively at the year that's just gone. So it is an application that you make at year end once you've spent the money. We're finding that in this capital constrained environment, a lot of our clients are really looking for non-dilutive funding, whether that be through grant programs or through applying for the R&D tax incentive. And we're finding also that a lot of investors are quite interested in understanding whether or not companies they're looking to invest in are making use of non-dilutive funding programs as well. So that's becoming definitely a key focus for investors. So the R&D tax incentive is the federal government's primary mechanism for incentivizing research and development activities in Australia. It does offer one of the most competitive R&D programs globally, especially for those who are able to access the refundable R&D tax offset. And there are two types of R&D offsets that are available depending on the aggregated turnover of the company or the R&D entity. So the first there is the refundable R&D tax offset. This is available to companies who have an aggregated worldwide turnover of less than 20 million Australian dollars. If the company is in sufficient tax losses and you've got excess R&D offsets, you can actually cash out the R&D tax offset, which is really beneficial to reinvest in either additional R&D activities or however the business needs. So the R&D offset for the refundable R&D tax offset is calculated by adding 18.5 percentage points on top of your corporate tax rate. So if you are a 25% corporate taxpayer, that represents a 43.5% offset. If you are a 30% corporate taxpayer, that represents a 48.5% R&D tax offset. So that can be really beneficial for the smaller to medium-sized businesses. If your aggregated worldwide turnover is $20 million or more, the R&D tax offset available to you is a non-refundable R&D tax offset. What that means is if you have excess offsets after your tax has been sort of netted out, you can carry those offsets similar to tax losses. You can carry them forward. So broadly speaking, the R&D incentive, it increases as the R&D intensity of the company increases. So what that means is we look at the percentage of R&D spend versus the total company spend. And so for R&D expenditure that makes up the first 2% of total company spend, it is able to attract an 8.5% after tax benefit. And for R&D expenditure that makes up more than 2% of the total company spend, it is able to attract a 16.5% net tax benefit. So the key term here to determine which R&D tax offset you're eligible for is the aggregated turnover of the company. This is a defined term, and it is something that's calculated every year to determine which R&D offset you can apply. So when we look at the aggregated turnover of a company, we're looking at the turnover of the R&D entity and any entity that is connected or affiliated with that entity. When we're talking about connected entities, we're looking at entities who have 40% or more shareholding in the R&D entity. So that's either 40% or more access to capital, income, or votes. And then when we're looking at affiliated entities, we're looking at entities that could reasonably be expected to act in accordance with or the directions of the R&D entity. So in the example on the right, the aggregated turnover would include the turnover of the Australian entity, the R&D entity, the head company, who's 100% shareholder, and shareholder X, who has 70% shareholding in Headco. We often find aggregated turnover is sort of looked over and not properly assessed. And this is a real determining point to understand what the benefit to you is and which offset you can attract. So a really important threshold to understand before you access the R&D tax incentive. And then we look at R&D activities. So what are eligible R&D activities and how do the activities within your business fall into the definition? So we've got two types of R&D activities that can be claimed: core R&D activities and supporting R&D activities. So to have an eligible core R&D activity, you must have an experimental activity that is proceeding from a hypothesis through to testing and trialing, and then leading to observations and conclusions. The second criteria is that your experimental activities are undertaken for the purpose of generating new knowledge. So that new knowledge can be in the form of a new product, process, material, device, or service. And then the third criteria that must be met is that the outcomes of your experimental activities could not be known or determined in advance based on the knowledge, information, and experience available to you. So even if you do have a competitor who's developing a very similar product, if that information is commercially protected, that won't preclude you from having an eligible core R&D activity. And then you have supporting R&D activities. So these are often not experimental in nature, but they are undertaken for the purpose of supporting the core R&D activities, or for the dominant purpose of supporting core R&D activities. So these are generally things like literature or background, state-of-the-art research, engaging with key opinion leaders, if you're undertaking project management type of activities to support your core R&D activities, or even documentation of your core R&D activities. So these can be quite broad in nature, but they do need to be undertaken directly to support or for the dominant purpose of supporting your experimental activities. So prima facie, the R&D activities that you undertake in Australia are eligible. The Australian government does understand that Australia is quite a small country and may not have all of the expertise or facilities or population of living things for you to complete your R&D activities, which may mean that you need to undertake those activities overseas. If you are looking to claim the R&D tax offset on expenditure that you've incurred in relation to overseas activities, you can apply for what's called an overseas finding. This is an application that's made before the income year and in the year that you would like to claim the overseas activities. And it is an application that can take a little bit of time for approval. However, it can be quite beneficial if you do get approved overseas findings, and you can claim the overseas activities in your annual R&D claim. So there are 4 conditions that must be met to have an approved overseas finding. The first is that you are carrying out eligible overseas R&D activities, whether that be core or supporting R&D activities. The second is that your overseas R&D activities have a significant scientific link to an Australian core R&D activity. What we mean by that is the Australian core R&D activity could not be completed without first undertaking your overseas R&D activity. The second criteria is that the overseas activities that you're conducting cannot be done in Australia. And there are a number of listed prescribed reasons, but some of these could be a lack of expertise or facilities available in Australia, a lack of population of living things that don't exist in Australia, or for quarantine reasons, you may not be able to undertake your R&D activities in Australia. The fourth criteria, which is often the hardest, is that in your overseas finding application, your overseas activities, the costs that are actual and reasonably anticipated for those activities do need to be less than the actual and reasonably anticipated costs of your Australian-based R&D activities. So although the Australian government is happy to include overseas activities as part of the annual R&D claim, it does still want to incentivise the majority of that R&D taking place in Australia. So once you've identified your R&D activities, then it's a matter of identifying eligible R&D expenditure in which you can claim the R&D tax offset on. So it's quite a broad range of categories of expenses, but if you have employees who are engaged in R&D activities, we can pick up a percentage of their time and salary and wage that relates to those R&D activities. Direct costs such as travel or consumables being used in R&D activities could be included. Contractor costs, so if you've contracted a lab or a manufacturer or researchers at university, those types of expenses could be included. Indirect expenditure, so where there is a nexus to claiming overhead expenditure, we can pick up a percentage of overheads. And then if you are using assets in the performance of your R&D activities, we can look at picking up a percentage of the decline in value that's related to the conduct of R&D activities. So the R&D application process is a two-step process. The first is you need to identify your core or supporting R&D activities. You then need to ensure that you have supporting documentation on file that is contemporaneous to demonstrate the eligibility of those R&D activities. And then you need to prepare an R&D application form, which is an online form, and it gets submitted with a regulatory body called DISA, the Department of Innovation, Science and Resources. So that's the first step. The second step is the preparation of your R&D expenditure. So identifying relevant R&D expenses, calculating those expenses and ensuring that you have the relevant supporting documentation on file to support the nexus of those expenses to the registered R&D activities. And then preparing an R&D tax incentive schedule, which gets lodged with the ATO in your annual income tax return. If you are able to access the refundable R&D tax offset and you're expecting a cashback position, then it will take about 4 to 6 weeks post lodging your tax return to receive that cash. That's provided there are no questions from the ATO in the interim. So this slide I'll spend a little bit more time on. This is sort of key consideration and a discussion around some of the common mistakes or issues that we often come across with clients. So the first there is the buy or for rule. This is a rule that's been put in place to determine where there are multiple entities who are performing R&D activities, which entity is the rightful claimant of the R&D tax incentive in relation to that activity. So the ATO will look at 3 key things, and on balance of these, whoever meets these key criteria will be able to claim the R&D tax incentive in relation to those activities. So the first thing is who bears financial risk associated with the R&D activities. The second is who owns the results of the R&D activities. And the third is who controls the R&D activities. So this is particularly important if you are contracting with another entity to undertake your R&D activities, or there are multiple entities within a group that's not tax consolidated who are performing the R&D activities. It'll be very important to ensure that you've got the right documentation in place to support that if you are claiming the R&D tax offset, that you are the rightful claimant and that you satisfy those 3 key criteria on balance. The second there is payment to associates. So we see this quite often in the SME space. So the payment to associate rules require that where you are incurring an expense to an associated entity, that you are being invoiced for that expense and that you are constructively paying that invoice before year end to be able to claim the R&D tax offset. So quite often we see with SMEs that there will be a sole director who is providing input into the R&D activities, and that director may invoice the R&D entity. However, that invoice may not go paid in that financial year, and it may go unpaid until the following financial year. If it is unpaid, you cannot claim the R&D tax offset in relation to that invoice. So, however, if it is paid in following income years, that's when you are able to claim the R&D tax offset with respect to that payment. So that's really important to keep in mind, particularly in the SME space. Overseas finding applications, we've touched on that, but just something to keep in mind that is an application that does need to be submitted before year end to reserve your ability to claim expenses in relation to the overseas activities. So that should form part of thinking about your year end processes. Tax structuring, again, with any tax structuring, there should be consideration of which entity is claiming the R&D tax incentive, and making sure that you are putting in place the right documentation, not only to support your R&D activities and expenses, but also around the Bio 4 rules, the payment to associate rules, and the not at risk provisions. So while I'm on the not at risk provisions, these are integrity measures that have come into place to ensure that companies are not claiming R&D expenditure, or the offset on R&D expenditure, where they do expect to receive consideration in regards to those expenses. So this is really important to consider, especially if you are performing R&D for another entity. If you're expecting to receive or recoup that expense, then you shouldn't be claiming the R&D tax offset within respect to that expense. And supporting documentation. So we're seeing a lot of ATO activity, and that has increased as of late in terms of review, and supporting documentation is essential when you're looking to support your position in terms of eligibility of R&D expenditure, as well as if you were to be reviewed by DISA, eligibility of R&D activities. So it's really important that you do keep contemporaneous documentation around the nexus between the R&D spend, as well as the R&D activities that you've registered with DISA. Again, we would recommend that you keep this documentation on file for up to 5 years, and that documentation is kept throughout the income year. All right, so that's the end of our presentation for today, but open to questions.
Terrific. Thanks, Larissa and Ed. Some terrific information there. And you may have answered one or two of our questions, but we'll still ask a couple of them anyway, just to clarify some points on there. So, Ed, first question for you. Do you think the government will be using AI to summarise grant applications to make ranking easier?
I mean, AI is, becoming more and more commonplace in every workplace, so I can't see any reason why not. I think, the reason that the process takes such a long time is the volume of applications that are under consideration, but the level of detail that they need to go to. So each guideline sets out clearly, this is what we are going to score applications against, and the higher you score against those criteria, the more chance you have of funding. So it's a long and drawn out process in terms of going through all of those. So whether they use AI or not may not really speed up the process. There's the assessment part, and then there's the political approval that's required to sign off the spending of the money, which also adds a lot of time. So the use of AI could potentially be efficient, but it still would, the other parts of the program or the process that it wouldn't affect.
So it's probably AI inevitable in a lot of different processes, but it may not affect the outcome that much. Yeah. So, Larissa, a question for you, and it's a fairly common situation that we see. And the question is, government grants and R&D concessions require expenditure. For small business, much of the development costs is labour, which is usually the founders, which they don't charge the business for, because there is no income in the business yet. What is recommended here for assistance with both grants and R&D?
Yeah, I can speak to the R&D piece. I might pass to Ed for the grants piece. So we do find that a lot, as you mentioned, Andrew, where businesses don't pay their founders or their directors. Unfortunately, with the R&D tax incentive, in order to be able to access the R&D offsets, you do need to spend the money. And so there is a requirement to incur that expense. I believe there are vehicles out there who finance R&D offsets, so R&D financiers who could provide some of the cash upfront to be able to pay the founders, but from an R&D tax compliance perspective, you do need to spend the money to be able to claim the offset. I don't know, Edward, if...
Yep. So that's a matter of the small business owner having a look at the value of paying themselves for the labour that they put in, the cost and tax implications of that, because they would have to fund it themselves, and then the benefits of the R&D tax incentive.
That's right. Yes.
Yeah. So, Edward, are there any implications for grants?
So, I mean, one of the conversations we often have with clients is around, oh, well, we see we've got a lot to offer in terms of the eligibility criteria, but the ability for our ability as a business to match those funds, for every dollar that they take in grant funding, they have to have a dollar of their own. They don't have the dollar of their own, so that can be quite a challenge for many businesses. So there's a number of options. Something like the R&D tax incentive, where there's cash coming back into the business, potentially could provide that sort of those returns. And that complementary, if there's the external forms of bank loans, investment into the business, other ways of sort of raising funds. But also, I guess part of the conversation we have with clients is grants are about timing in some ways as well. You need to be grant ready. You need to be able to be in a position where you can deliver something that is of value to the government. And so at an earlier stage, there's still, pre-revenue, it's very difficult to sort of be in a sustainable business that can drive something ahead for the government. So often it's around think the being there at the right time, thinking what's sort of suitable for you at that time in your business, and perhaps and also you've got to think about it. Government grants are essentially public money; it's taxpayers' funds. So the big part of the assessment process is: are you doing the right things? Are you going to do what we need from you? But what is the risk of giving your business money? Is it going to fall? Are you going to fall over, and we're going to lose that money that we might invest in your business? So that's a big consideration in the assessment processes around the financial health and viability of the business. So again, it's around, picking grants as a tool for the right stage in your business and the right time.
Yeah, terrific. Thank you. And while we've got you, Ed, another question: how does IP impact on grants?
Yeah, so a lot of the, I guess we talked about grants being that moving knowledge forward, building understanding. So IP is a key part of that. So if government's funding the development of technology, they will want to understand from a risk perspective, is that technology protected? So is your IP that we're investing in protected, so that we're not going to lose our shirt by someone else coming in and undercutting you and taking away the competitive advantage? So there's that lens on IP. A lot of the grants require the ability to share learning, to share knowledge. And the conversation with clients is finding a way to meet the expectations of the funder without necessarily selling the farm. There are ways that you can meet the knowledge sharing and sort of intellectual property expectations of the grant, without necessarily fully signing up all the IP ownership over to the government, as an example. So there's in each program, the IP and the knowledge sharing expectations are clearly defined, and it's an area, as part of that assessment as to whether to go for a grant is, well, can we fit in with those provisions? Are what's expected of us something that we can live with, or is it something that we perhaps maybe don't want to get involved with? And actually, it's on a case by case basis, understanding what the impact might be and whether that's right for your organisation.
Okay, terrific. Thanks. And Larissa, question here is quite an interesting one. There are a few horror stories about the government clawing back R&D tax incentive after multiple years. We might think we meet all the criteria against core R&D, but what if the government disagrees? How can we protect ourselves from that, I suppose, is the core of that question.
Yeah, it's a really good question, and we are seeing the ATO reviews increase. That's for certain. So, in terms of protecting yourself, it's all about keeping that contemporaneous supporting documentation. So, and it's from two aspects. So, from the R&D activity side of things, making sure that throughout the year you are documenting the R&D processes that you're undertaking. You are documenting how those R&D activities that you register with DISA, how they meet the eligibility criteria. If, it's going kind of all the way back to a school classroom hypothesis testing, like all of that documentation needs to be kept on file. So a hypothesis, what tests you ran, what sort of measurements you took and what your outcome was. So all of that needs to be documented, kept on file throughout the income year. And then in terms of the expenditure side of things, it's about if you've spent money on a contractor, it's ensuring that, whether it's in the services agreement or it's in the invoice itself, that it's really referring to what the R&D activities that you've registered in some way, so that if the ATO was to ever look, they can clearly draw the line between the expense and the R&D activity that you've registered.
Okay, thank you. And a couple more questions here on R&D before we go back, and been asked for further discussion on IGP grant, which we'll come back to you in a minute with Ed. But Larissa, the question here was, they've asked, it wasn't clear, but can existing ATO tax debt, can it be offset against a successful R&D tax incentive? So business with an existing ATO debt, will that R&D incentive be offset against that?
Yeah, I think there's a couple of things to consider, and it's probably very much dependent on a number of tax positions in the company. But say, for example, the company was to receive a cash refund from the government from its R&D claim, then the company is able to utilize that cash how it wishes, and if that's to pay off an existing ATO debt, then that's great. So that can be utilized there.
Yeah, and I'll add to that as very much a general tax practitioner. If you owe the ATO in one account and there's a refund in another, they will generally take it across and settle their own debt first, is general experience. And when you're doing an R&D application, must the IP be held by the same entity that is applying?
No, it doesn't have to be. So when I was going through the Bio 4 rules, it does look at which entity owns the results of the R&D. That doesn't necessarily require legal ownership of IP, but it does require an ability to exploit the IP. So quite often we do see groups that aren't tax consolidated where you've put IP in one entity, so that's your IP holding entity, and then you've got a trading company who's doing the R&D activities. So so long as there's an agreement in place that the trading company, who may be the R&D entity, is able to access the IP and exploit what IP it generates, that will be helpful. So there's a number of things to consider, but legal ownership of IP is not required.
Terrific, thank you. And Ed, had it raised here that there would be more discussion on the IGP grant. Are you able to provide a little more detail on that?
Yeah, so the Industry Growth Programme, the IGP, is the one that I touched on earlier. So that is designed to help Australia to develop new industries, to help businesses that are developing innovative products, processes, or services, and they are in relation to what they have described as priority sectors under the National Reconstruction Fund. So the priority sectors are things like value add in resources and the mining sector, value add in agriculture, defence, cyber, robotic technologies and automation. There are 7 key priority areas and a number of enabling capabilities that projects should align to, and they expect for that technology or product, process or service to be highly innovative, either cannot be found in Australia and potentially cannot be found globally, and they're looking to, it has to be at least at a sort of basic proof of concept, so what we call technology readiness level 3. That needs to be, and the money needs to support the business to move that technology from where it is at the proof of concept through the journey towards full-scale commercialization and being to sell it to you and I in the marketplace. So the focus of using that funds how to move you in that sort of technology development journey, and depending on where you are in that, how close you are to the commercialization of your technology, there are two different streams. So the early stage gives you access to anywhere between $50,000 to $250,000 in match funding to support your technology development or product development. If you're later stage, there's the commercialization and growth kind of grant, which gives anywhere between $100,000 and $5 million, again on a match funding basis, dollar for dollar. And the way to access those grants and be eligible for those grants is you have to first apply to what they're calling the Industry Growth Program Advisory Service. So it's a short application that outlines your business and the project that you're trying to develop and why it is innovative. And that is then assessed. If you're accepted, you are then allocated an advisor, and there are advisors located across the country, funded by the federal government. They'll come and work with you and develop a growth plan for your business to help understand its strengths, weaknesses, opportunities, and challenges, and help you sort of understand the pathway to growth. And part of that could be what funding, either through the IGP or through other sources, could be available to you. And you can only access the IGP grants if your advisor says, I think Business X is eligible for the early stage or for the commercial and growth grant. So it's a sort of stage gate. So it adds time to the process, but there is value in that process in the sense that you have a paid for advisor that can sit with you and bring that external perspective and say, hey, let's think about where you are today. What are you trying to do in terms of developing this product to market, and how can we help you sort of put a strategy together? So there's value, even if you don't make it as far as the actual grant funding, there's actually an opportunity to get that free advice and support to help. And often as a small business owner, you're in the business working on it, driving and putting in all the hours. So to have someone else come in with an external perspective and look at things from a different angle can always be helpful.
Terrific. Thank you very much, Ed. Now, a couple more R&D questions here. Larissa, is refund considered an income? Will it be taxed by the ATO?
It's not considered income, and it won't be taxed by the ATO. So yes, when you do receive that cash refund, there's no tax required to be paid on top of that.
Yeah, that's terrific. Thank you very much. And what happens in the case where you received some government grant funding and use that towards R&D activities and want to claim the R&D tax offset in relation to those expenses?
Yeah, so we see that quite often, where a lot of our clients are receiving government funding as well as accessing the R&D tax incentives. So if that is the case, there are integrity measures to remove the benefit available under the R&D tax incentive. So you can claim those costs, it's just the benefit will be removed through what's called a grant clawback mechanism.
Yeah, so you don't get to double dip.
That's right,
that.
yes.
Yep. And one final question, I'll put it out for both of you. I'm not quite sure, or actually there'll be two questions. Can we go for funding too early or too late is the question.
I think the answer to that,
R&D or grant. Yep.
Well, I think it certainly applies. Timing is critical in grants. So you certainly can apply for it too late. So often the source of frustration that people find with government grants, and it's, government grants are positioned as free money, and they are in the sense that you don't have to pay them back, but they're not, because they're hard to come by. There's lots of administrative hoops, and to get a decision whether you're successful or not takes a long time, and you can't start your project until you've had the agreement for funding. So typically when we talk to clients, we'd say, well, you've got a budget anywhere between 3 to 6 months from the point you submit an application to the point that you actually get the decision around funding. And so that can be a challenge. So if you've got a project that's starting next month, clearly a 3 to 6 month time frame for a decision is not going to align with your project. So it is about timing. You can also be too early for funding in terms of that risk profile is too high for the government to potentially say, well, there's not enough evidence that this is a sustainable and viable business. And often programs require that businesses have been trading for a defined period of time, or have a minimum turnover or a maximum turnover. So there's certain eligibility criteria that you might not have, you could be too soon because you haven't had the trading history or you haven't quite hit that turnover number.
Yeah, terrific. And one last question for you, Larissa. I'm not sure if this is correct, but it says, why does the ATO always audit R&D incentive applications? I don't know if it's always, but is there a higher risk there?
There definitely is a risk associated with that. At the end of the day, similar to grants, it is taxpayer dollars. So whether it's a reduction in your tax payable or a cash refund, there's definitely a risk of review because the government wants to see that you're doing the right thing under the program. So, and we are seeing at the moment, the ATO has increased its activity around review, and there has been a slight change in the way that DISA is now also going to a full review as opposed to sort of initial upfront questions, which occurred under Oz Industry, who was the previous regulator. So there is more review activity, and hence sort of going back to the earlier question, it's just really important that that documentation is kept on file. If there is a review, that you've got something to really support the claims that you are making.
Yeah, thank you. So thank you both, Ed and Larissa, and thank you everyone who has attended our webinar today. That brings us to the end of today's webinar. And once again, appreciate you joining us. We hope you found the session valuable and it's given some useful strategies and reminders, particularly with a variety of grants that are out there and the complexities around R&D. As a follow-up, we'll be sending all attendees a link with this webinar recording. Remind you once again to follow the link in the chat and you can download the RSM R&D report. And if you'd like any tailored advice or any questions on any of the topics today, feel free to get in touch with us and we'll be happy to talk to you about it. Thanks again, and we look forward to seeing you at our next webinar. Thank you.